Hello investors. Welcome to Investment Idea. Today, we're going to talk about Jindal SAW Limited. This company is a well-known player in the infrastructure sector. Let's see what ups and downs its share price is seeing. Today, June 9th, 2025. Its share price is trading around 231 rupees 90 paise, which is more than 6% up today. But, if we look at the long-term picture, the story looks a little different. In the short term, in the last 6 months, the stock has given investors a negative return of almost 30%, which is a cause for concern. This means that those who invested 6 months ago are now at a loss. Now let's go back a little further. If we look at the performance of the last 1 year, here too the stock has given a negative return of almost 14%. During this period, big market indices like Sensex and BSE 500 have performed better. This clearly shows that Jindal SAW's stock has not been able to benefit from the overall market rally. This underperformance often happens when there is some weakness in the company's fundamentals or investor sentiment for that stock becomes a little weak. Technical indicators like MACD are also currently giving a bearish signal, which means that there is still downward pressure on the stock. But if you are a long-term investor, there is an interesting twist here. In the last 3 years, Jindal SAW has given its investors a tremendous return of 472%. This is a multi-bagger return. This means that the company had performed very well in the past, due to which the share price went up like a rocket. So the question arises, what suddenly happened that the stock which was running so fast has now suddenly come down? We find the answer to this in the company's recent financial results, which we will discuss in detail later. So the summary so far is that in the short term the stock has given a lot of pain, but in the long term it has created a lot of wealth. Is the current price drop a temporary problem, or a long-term concern? For this, we need to properly understand the company's business, its financials, and its future prospects. Let's move forward and see how strong the company's business is, and why this unusual trend is being seen. It is very important to understand this so that you can make an informed decision. So let's understand the company's business in simple terms. Jindal SAW Limited mainly manufactures different types of pipes. It sounds very simple, but these pipes are used in very important places. Their biggest product segment is ductile iron, or DI pipes. These pipes are used for supplying water in cities, for sewage systems, and for irrigation projects. Whenever you hear that the government is working on projects like Jal Jeevan Mission, or smart cities, understand that a big opportunity is being created for companies like Jindal SAW because there is a huge demand for DI pipes in all these projects. Another important product of the company is seamless pipes. These pipes can withstand very high pressure and high temperature, so they are used in the oil and gas sector. When oil or gas is extracted from the ground and transported from one place to another, these seamless pipes are used. In addition, they are also needed in power plants and the automotive industry. This means that the company's business is directly linked to the country's infrastructure and industrial growth. If spending on infrastructure increases in the country, Jindal SAW will directly benefit from it. Jindal SAW not only sells its products in India, but also abroad. They have a strong export business, and they send their products to many countries like the Middle East, Europe, America, and Africa. This is a very good thing, because it means the company does not depend only on the Indian market. If there is a slight slowdown in India, global demand can support the company's sales. However, there is another aspect to this. If there is a slowdown in the global economy or oil prices fall, export orders can also be affected, as we have seen recently. So in short, Jindal SAW is a company whose products are very essential for the country's development, from water to energy. Their business largely depends on government policies, such as infrastructure spending and global market demand. Therefore, whenever you analyze this company, it is very important to keep an eye on the economic trends happening in the country and the world. This understanding can give you a better estimate of the company's future performance. Before investing in any company, it is very important to check its financial health, that is, its accounts. Let's take a look at Jindal SAW's recent financial performance. The results for the quarter ending March 2025, that is Q4 FY25, have been a bit weak. The company's net sales, or total sales, decreased by 10.5% compared to the same quarter last year, reaching 4,401 crore rupees. When sales fall, it directly affects the company's profit. And that's what happened here. The company's net profit also fell by almost 10.3% to 474 crore rupees. After 9 consecutive positive quarters, this was the first negative result, which disappointed investors quite a bit. Now let's talk about margins. Operating profit margin is a very important number. It tells how much money the company is earning from its core business for every 100 rupees of sale. In the March 2025 quarter, the company's margin fell to 14.59%, which is the lowest in several quarters. A drop in margin could mean that either the company has to give discounts to sell its goods, or the price of its raw materials, like iron and steel, has increased. The biggest reason for the recent drop in share price is these weak quarterly results and margin pressure. But not everything is bad. If we look at the company's balance sheet, a very positive thing appears: the company's debt. Jindal SAW has done a very good job in reducing its debt. Their debt-to-equity ratio has now improved to 0.43 times. Generally, a ratio below 1 is considered good, and below 0.5 is considered very healthy. This means that the company can easily pay off its debt from its earnings, and the company's balance sheet has become stronger and more secure than before. This is a very good sign for long-term stability. Another good thing is the company's dividend policy. The company has recently announced a dividend of 2 rupees per share. This company has been consistently giving dividends to its investors, which is a symbol of stable management. Importantly, the company distributes only a small portion of its earnings as dividends. This means that most of the profit, almost 94 to 95%, is reinvested in the company itself. This money is used to expand the business, set up new plants and fund future growth. So, even though the recent quarter was bad, the company's balance sheet and profit reinvestment strategy give hope for the future. So now we come to the biggest question. Is investing in Jindal SAW a good decision right now? Let's put all the points together and draw a final conclusion. The company's business model is very strong and directly linked to the country's growth. The Indian government's focus on infrastructure, especially the Jal Jeevan mission, is a very big positive trigger for the company. As long as water pipes, gas pipelines, and new cities continue to be built in the country, there will be demand for Jindal SAW's products. Therefore, the long-term growth story is still intact. Some things in the company's fundamentals are positive, and some are negative. If we talk about positives, the company has significantly reduced its debt, which has strengthened the balance sheet. The company is reinvesting profits in the business, which is good for future growth. Analysts also believe that even though the recent quarter was bad, the company's earnings per share, or EPS, could see a good growth of 53% in the coming year. This indicates that the current slowdown may be temporary and the company may recover soon. Now let's focus on the negatives. The biggest concern is the recent weak quarterly results and falling margins. The stock has been underperforming the market for the last 1 year, and the technical trend is also still bearish. This means that more pressure on the share price can be seen in the short term. Global economic slowdown is also a risk, as it can adversely affect the company's export orders. So new investors need to be a little cautious, as the stock may go down a little further. So what's my final take? Look, Jindal SAW is a fundamentally strong company that is going through a temporary rough patch. If you are a long-term investor, that is, you want to invest for 3 to 5 years or more, then investing little by little through systematic investment plan or SIP at the current price can be a good strategy. Buying during a dip can give you a good average price. But if you are a short-term trader, then it would be better to avoid it for now, as volatility still remains in the stock. As always, before making any investment decision, do your own research and consult your financial advisor. Happy investing!